Hello traders, this is Rick with Hit and Run Candlesticks. How are you doing? Hey, this is Sunday, April 13th, 2025, and I want to get this recording out there on the market, some charts, and we have a beautiful day here. I'm going to get out, work in the yard, and mow some grass. But right now, let's take a look at the market and a few charts. Oh, as a reminder, if you like these videos, click that thumbs up button for me. I sure would appreciate that. And if you'd like to receive alerts when we make a new video, click that subscribe button and make sure you click the bell on there, okay? Alrighty, let's get started. So I've got the SPY up right now, and the first thing I want to do is let's take a look at this chart right here. Let me delete that. So based on this chart, and as far as the moving averages go and the trend goes, we are in a bearish market. Okay, you can clearly see that. Let's see, there we go. Our red and green dots, that's what we call our trend indicator. 21 EMA is what I use, and I also use the 17 EMA. They don't make a huge bit of difference, but I might change it up just for a little spice here and there. Either way, you can see our 8 exponential moving average, what we call the T line, the white line, is currently below the dots. Dots are red, meaning price is below. And it doesn't take a scientist, it doesn't take a mathematician to see that we are clearly in a downtrend. So based on trend, based on moving averages, we are in a bearish trend. Whoops, wrong one. There we go. If we take a look at price action, though, I think we are starting a bullish trend. So I'm gonna make a statement here that could be very, very wrong for the future, but for the near future, I think we're looking at something a little bit bullish. I think the bottom is in for the near future. And we'll kind of talk more about that. But based on that big, huge candle, let's see, on the 9th, 3 days ago, and that was shorts covering, by the way, on the pause of some tariffs. So with this short covering and the fact that the following day we had this candle, this hammer type candle with a long wick, stopping right at the 500 period moving average here, and then Friday ending up with a bullish engulf, I see us for the short term moving higher. Now there's a couple of things that needs to be done before we can get too much higher, and let's see, let's make that, there we go. This area right through here, you can see this right there, where we have this low here, and then we have this low here. And if we move that across, well, that's just about where we closed on that big 11% moves. Talking about a super volatile day, insanely volatile. So you can see that right where we closed. And if you see these 3 lines, that's also the 50% retracement of the SPY high and then the SPY low. Right in here. So that 50%. So we're going to need to clear that. And then we have this downtrend. You can see the red line there starting up here, moving all the way, touching that high and then that high. Just let it continue down. So you can see that whole area right through there is pretty interesting. We'll make it green. So, if you give price a couple of days, you can see that we are right smack dab moving through that. So this is where I'm seeing, bullishness over the next, the near future. To continue that bullishness, to take it higher up to the 50% retracement, or maybe that 578, 582 area, we're going to need to, let me just change colors again. We're going to need to break out here, break out of that trend line, and we could keep going straight up, but if it wants to test a little bit, that's fine too. But then that's what I'm looking for based on that breakout and holding this area right through here. Now, once we get to that 50 period moving average, I think we need to have another conversation with the market. I think we need to take another view of the market, maybe what's coming out in the political side. Are tariffs heating up? Are they cooling down a little bit? Things like that. But right now, while the trend remains down, I think price action is pushing up. So longer term, we are still down. The very near future, I think we're bullish right in here, which plays out perfect to the hit and run candlesticks game plan, the way we trade, short term in nature, from overnight to 3 days to 5 days to 10 days, 20 days at the very outside. So if we're looking for those, swings based on price action setting up and then swings higher, I think that's what we've got going on in this market. Now, there's 3 areas that's very, very important with the market that I think needs, one of the 3 needs to come alive. Transports. If you look at the transports here, again, the chart looks very much like the SPY does. We have the low in there. You've got that big move here on Wednesday. You've got that hammer, that tail, and then you've got Friday's candle here. For the most part, that price action looks the same. And there's our trend indicator right there. There is, right here, I probably should put my arrow in there, hadn't I? There we go. There's the 50% retracement area right through there. And here is the 500 period moving average. So for the market for a longer term, the market's going to need to break through all that. And that's a fair amount of resistance right there. But it could do it. Now, we need the transports, or we need SMH. And you can see SMH here, very similar chart pattern. You can see that 50% retracement. You can see that we're just under the 500 period moving average. But I still think we pop over that a little bit in the very near future. So as far as the near future goes, what I'm looking for is something like this. We'll take it from this low up into that 50 period moving average. So that's the playground for SMH. Keep in mind, there's the 50% retracement. So what that means is we could rally right up and fail right through there. That's a very good resistance area. Now, if we break through it, and test it, then that 50% resistance area becomes a very strong support area. So providing price agrees with that. Everything is about price and trend. Price and trend is the meat and potatoes to trading. And if you accomplish the understanding of price and trend, you just about have trading whipped. There's a few things usually between our ears that fouls us up, but understanding price and trend is key. So let's get back to this 50% retracement. If we get through it and we find support there, then we could run right up to that 242, 245 area on the semiconductors. And that is 2 of 3. We need 3, okay? So 1 is the transports IYT, 2 is SMH. We just need one of those 2, or what we need are the Qs to step up. Now, if the Qs step up because of the Mag 7 are going to be important, because the Mag 7 can run this market without the transport and without SMH. Of course, if Mag 7 start moving up, more than likely SMH is going to move up with it. All right, more than likely, but not guaranteed. So the Qs could also turn this market around. Now, when you think about it, the Mag 7 are extremely oversold. So any kind of good news pause on tariffs, good news for a while. Anything like that could get the Mag 7 kicked off, and that could get those Qs popping up. Here's the 500 period moving average, the yellow line. We've got our trend indicator right where we stopped here Wednesday. So we need to break through that, retest or break through the 50% retracement area, which is right here. If we get through that, and again, we use that as support on a test or some sort of a rest, then we can come up and take on that 50 period moving average and then run us up into the 501, 506 area for the Qs. That would push the market in a bullish direction. That would push the market in a bullish direction, maybe for a little longer term. Now, we all know that we have earnings coming up. You know, earnings may be a mixed bag as far as the earnings that come out good or the earnings that don't report very well. But as far as the future goes, I suspect what everyone is going to say is the future is a little bit in the air based on the tariffs. So there's not going to be much of a forward idea coming out of the earnings. So right now, I believe, which I believe all the time, is keep track of the chart, follow your trend, follow price action, follow your entries, and make sure those stops are in, make sure that profit targets in, and take profits when you have some, or at least take some off the table, because we all know this market is insanely volatile, and it can pull those profits right off right now. Okay, so anyway, that's something on the market that I see here. I've got a few charts I want to take a look at as well that may help the market, and if they turn around the wrong direction, they could hurt the market. The main thing is follow the trend and follow that price action. Okay, so again, if you like this video, please make sure you click that thumbs up for me. I would greatly appreciate it. It shows me how many people are watching the video and if the video is worthwhile. Also, if you'd like to get those updates when we do put out a new video, check, hit the subscribe button and click that little bell so you'll be notified. And by the way, if you didn't know this, on YouTube and X, every morning at 8:45 in the morning Eastern AM, I do a pre-market that everybody is welcome. The whole public is welcome, okay? And then a quick reminder that John from our day trading, BYOB day trading, our day trading division, has an open house coming this coming Monday, the 14th. That's tomorrow. On the 14th. So make sure you find that link and register. We have it all over our social media, okay? All right, let's take a look at a few charts. One is gold. We need to take a look at gold. Gold had a nice breakout here. Congratulations for everybody that is holding some gold. Whatever gold instrument you're using, if you're making money in it, congratulations, okay? Way to go. So right now, what I would look at is watch for those that aren't in it, or maybe you want to add to it, watch for a pullback. And what I'm going to be looking for is what we call a 3/8 trap. I'm going to talk about a 3/8 trap on a few charts here. You can also find a couple of charts in our Facebook, in our X, over on Stock Twits. I've posted a few, so you can check those out. But watching for this entry, which I think the 3/8 trap entry is one of the best entries out there. So if we, well, let's talk about gold, and then we'll start looking at some other charts. So what I'll be looking for is gold to pull back a little bit. Pull back, boom, 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 boom. Watch for that 3/8 trap entry, and I'll explain that a little bit more here in a minute. And then look for that buy signal, and that could set up for a really nice buy. To show you a 3/8 trap entry here, let's use yellow. Right through here, that would be a 3/8 trap entry. Right through here would be a 3/8 trap entry. Now, when I'm talking about a 3/8 trap, I'm looking at a couple of possibilities. A 3/8 trap, an absolute 3/8 trap, price trapped between the 3 and the 8. I'm looking at a 3/8 trap breakout of the standard 3, or a 3/8 trap 3/8 trap breakout of the high 3, and I'll try to explain that a little bit here if I remember on a few charts. Okay, so that's what I'll be waiting for on GLD or other gold instruments. Okay, let's take a look at Google. Actually, no. Let's take a look at CRWD. This is setting up pretty nice. And if you take a look at the weekly chart, we've got a 3/8 trap setting up right now, and where the T line is up. And let me move this over here and go to that high. There we go. I use the high of the exponential. A lot of people use the last price, which is perfectly fine. I actually use scans for both, so I can take in as many possible 3/8 traps as possible, so I can make a better informed decision on different charts. Okay, so you can see the weekly here. We've got a nice double bottom. There's your 3/8 trap, so that's a buy in that area. Or the breakout would be the breakout over that yellow line, which would put us over the recent high. So we would have a low, high, higher low, higher high. If we go back to the daily, you can see the 3/8 trap was right there and right in here. Okay, and if we get that breakout, that would push us a breakout over that weekly 3/8 trap. You see that would push us over that 50 period moving average. So that puts CrowdStrike right in the bullseye for a possible 3/8 trap entry for the short term going forward. Short-term bullishness going forward. PANW, I think, is another one. You can see here on the daily, there's the 3/8 trap right there. There's let's see, that's Friday, Thursday's candle, and then there's Friday's candle. So if we start seeing a breakout, which that's a buy, let's do this right here. So this is a buy based on the 3/8 trap, and then the breakout would be above that area right there. Now, so let's take a look at PANW. Here it is bouncing off the 500 period moving average. We've got that big, massive day on Wednesday. We are still below the trend indicator. The T line is still below the trend indicator. So that means moving averages and trend is still down, but price action is pointing up. And this is why I'm looking at the short term being bullish, longer term at the moment still being controlled by the sellers and bears, still pushing us down. So what I'm looking for here is a breakout and then a run up and retest that downtrend line, 50 period moving average here. And then what it does there, if it rolls over, that'll tell a lot. If we move up and roll over in this area right there, that'll tell us a lot. And then, if we break through and find some kind of support in here, that will tell us a lot about this stock and a lot about the overall market. GRPN is another one that I like. I posted this out to members Friday on the members app. If we take a look at the weekly chart, we clearly have a top right here. Clearly, right? It needs to break out. Well, and what we're doing is you want to look at the future for this stock. That's what trading is. If we're trading this long, what is the future for this stock? And there's the super fast near future, then there's something in the middle, and then there's longer term. And you can break that down into a million different pieces. What I'm looking for is, let's peek at the monthly chart here. And if we start breaking through this level where we are right now, well, right there is the 50% retracement of the March, November right here, down to these lows, then what that does is that gives us a possible 60% trade up to that 50% mark. So going from about 19 to about the 31 area. So let's do this. Let's put a line right in there like that. And then let's go back to the daily. Let's push this down. So right there is what I'm looking for. So here we have, well, this is what we call a gap and trap, by the way, where we gap up and then come back into that 3/8 trap. So here we are into that 3/8 trap right here. Here's a 3/8 trap breakout. Look, right now I'm looking for this to move higher. There's no doubt in my mind we're going to see a little bearish activity, profit taking. But as long as that profit taking stays sort of muted and it sticks to profit trading and not trend breaking, then I think we're okay. So we're going to look for that to move up. And again, it's probably going to do it again and then move up. Basically make its way back up to this 31, 32 area. And that's how I get that 60% on GRPN. It's all based on our breakout and holding that weekly breakout right there. Nike is one that we've talked about. Nike's putting in a bottom right in here. I feel it's a bottom. And when we start to break out of that bottoming box right here, that bottoming box, then I'll be looking at that 50%. Let's just move this down here. That 50% retracement up there around that 67, 68 area. Once we start to break out, we're going to need to move above the T line, break out of that box, and turn those dots green. And then that would be our target up there, followed by perhaps the 50-period moving average. So we'll keep an eye on that, okay? Stocks like Microsoft, there we go, Microsoft. Microsoft is setting up. We are clearly still in a bearish trend, or have we broke the trend line? So if we just take these highs over here, January highs, and we start, that red line, if we pull that red line down, you can see that we've broken out, we've tested, and we're over that trend line. We're challenging the 500-period moving average. That's the yellow line. There's the 50, and there's the 50% retracement. Right now, I think we have bullish price action. Downtrend, it's just now turning. Now, one thing that I like to see in a chart is the white line over the dots. That gives me bullish momentum, makes me feel better about the bullish trend. So while we have broken that trend, I don't really think the trend has completely changed. Sellers still have the trend, but price action has the game. So right now, price action is looking bullish. We do need to get through the 50% retracement, so basically over 397, over that 50-period moving average. That would probably push the T-line over the trend indicator, and that could be game on until those sellers come back in. Remember, short-term bullish, but the longer term remains to the bearish side, so keep that in mind, okay? Now let's take a look at that Google. Google here, we've got our low in, here's our high. Our 50% retracement is around 174, 176. We're butting our head up against that downtrend line. We're finding support over the 500-period moving average. We just need a little bit of bullishness to kick us up. That would pull more shorts into cover, and that would drive Google up. We start driving some of these Mag 7 stocks up, that could get the market in a little bit of a happy place and drive the market much higher, maybe more than what we actually expect for the short term. Okay. Do I have any others here? let's take a look. Let's take a look at Tesla. All right, and we'll call it an afternoon here. So Tesla here. Now I am long TSLL. Let me change this different color so it's easier to see. There we go. So Tesla here, we've got a double bottom. We had the big day on Wednesday. You know, everything had a big day on Wednesday. We broke through the 500 period moving average, and then we've pulled back Thursday and Friday, holding over that 500 period moving average. Now we've got a little bit of a short, you know, if we connect those highs, you can see we have a little bit of a short-term downtrend here. Well, we start to break out of that. Can you see the path to that 50 and then to the 50% retracement? So we would be looking at this area right through here, okay? That area right through there. So now, like I said, I'm long TSLL, which is a single stock ETF for Tesla. By the way, the single stock ETFs are fantastic for some of these higher price stocks. If you want to buy them, but you can't, the single stock ETFs, fantastic. So that's what I'm looking for on Tesla, and of course that'll drive my TSLL up, and I'll be just happy as can be. Now, once we get through this level, then we can look at Tesla moving higher, but that's another conversation for another day. Right now, I want to say thank you. Thank you to Right Way Options and BYOB. Those are divisions of Hit and Run Candlesticks. Also, remember that BYOB day trading has an open house open to the public tomorrow, April 14th. That's a Monday, all day. Right Way Options will be having an open house coming up, and so will I at Hit and Run Candlesticks. So stay tuned. If you like this video, give us a thumbs up. Click on that subscribe button and make sure you click on that bell. I'd love to see you tomorrow morning, Monday through Friday, 8:45 a.m. for our live pre-market open to the public, so you're welcome. Check us out. You'll see us go live on YouTube and X at 8:45 a.m. Eastern. Thank you very much, everybody. We'll see you later. Take care.